How's it going, my good friends of YouTube? It's THIS here. Welcome back to another video. So the stock market was all over the place today. We had the S&P up 0.3%, NASDAQ 100 up 0.4% as the Dow broke even and the Russell went down 0.3%. So today, like always, we're going to break down the market, some charts, stocks I'm looking at right now, and we're going to break down some earnings reports. So sit back, relax, take a sip of your coffee, go down below, snag your $50 from M1 Finance, check out my Patreon as well if you want all my real-time buys, sells, and call-outs, and let's get right into the video. So today, we hit an all-time high, at least when it comes to SPY. And yes, that did rhyme, guys. That was unintentional. But if you didn't know, I'm sure you do, SPY tracks the S&P 500. And we hit that all-time high this morning. In fact, we hit an all-time high this morning. And after market hours when we saw that massive rally throughout the day. You guys can see here we hit 444 roughly pre-market, which again, that was an all-time high, and we were hitting all-time high after all-time high after all-time high throughout the day. And now pre-market, or rather after market, we just hit one at 445.26. And not to toot my own horn, but I'm going to toot my own horn in this video. We called the breakout weeks ago. I mean, maybe not weeks ago, a couple days ago. We called it out. We said, look, if 441, 442 breaks, which if you guys remember, we were trading horizontally from the 23rd of July all throughout the beginning of August, and at the same time, we were making higher lows, forming an ascending triangle. I told you guys this. If we broke out of 441, 442, we were going to see a leg up and more upside, whether it's to 445, which we just hit right now, 450, or maybe even higher. And that is exactly what ended up happening. We broke out. We're trading above the moving averages. We've been hitting all-time high after all-time high after all-time high. And the markets, they're just looking very bullish, at least when it comes to the S&P, right? So QQQ on the flip side didn't hit an all-time high today, but it still looks fairly bullish, especially the fact since the fact we saw what am I even saying here? Especially since we saw 365 hold on the 20-day chart at a higher low. You guys can see that here. We ended up holding that this morning, and we actually broke above both moving averages on the 20-day chart. We closed above them as well. So that's another great sign that the bulls are gaining steam for QQQ. And there's still a big sticking point coming up right around 369. I mean, we've been covering this the past couple of days, so we must break out of 369, which was the all-time high from a couple days ago. It was also a resistance from the end of July. And if I pull up my channel tool very quickly, you guys can see QQQ is also in a little downwards channel. It has been the past 1, 2, 3, 4, 5, 6 trading days. So, yeah, I mean, we held the bottom of that channel today. We ran up and we closed at the top of the channel. So if we break out of this point, whether it's tomorrow, next week, you best believe all-time highs are probably going to be coming. Let's be honest, right? And we'll probably go 370, 375, maybe even 380. That's definitely possible here on QQQ. And we got jobless claims numbers today, which I completely forgot to write down here, but I mean, I'm sure they were in the 400,000 range, 300,000. I forgot to check, or I did check, but I forget what the numbers are. But as you all know, come on, the markets, they could care less about the jobless claims numbers. It's been like that for months at this point. At the end of the day, what really moves the markets, at least today, in these ages we're living in, it's mostly the Federal Reserve, actions from the Federal Reserve, whether it's lowering or raising interest rates. That's going to have a huge impact on the stock market, whether it's tapering bond purchases or adding more bond purchases, things like that. That's what really fluctuates the markets these days. It's not really the jobless claims numbers, even though it's crazy that hundreds of thousands of Americans are still filing every week. it just doesn't move the markets. And maybe, let's say, corporate earnings from the big guys, the big tech names, that will probably move the markets as well in either direction. And it makes sense because those stocks, Facebook, Amazon, Apple, Google, Microsoft, Tesla, these companies make up 20-30% of the overall S&P, especially if you're adding Netflix into that bunch as well. So it makes sense that their earnings will fluctuate the stocks, which will thus fluctuate the overall markets. But other than that, corporate earnings, Fed actions, nothing really, nothing else really moves the market. Oh, I guess you can say the corona as well. You guys know what I mean. Okay, yes, that's another variable. But other than those three, it's really nothing much else at this point. And I'd love to know your thoughts on that. Let me know down below in the comments. And while you're at it, make sure to smash that like button, subscribe to the channel if you haven't done so already. If you like these types of videos, I'm typically making 2 per day, at least during the market week. Weekends, Sunday I upload, and sometimes on Saturday, or sometimes I take the day off. It really depends what's going on. But yeah, make sure to subscribe, and let's talk about some stocks here, many of which I own, one of which I just bought again just 20-30 minutes ago in the after-hour session. And by the way, I'm filming this at 7 p.m., so I haven't really bought a stock at 6:30 p.m. in quite some time. But that's the power of having after-hours trading enabled, which I'm sure a lot of you guys do out there. And we'll get to that stock in a couple of minutes, so stay tuned. And stock number one is Tattooed Chef, TTCF. And full disclosure, you guys probably know this, some of you might not. I've been long Tattooed Chef for maybe half a year at this point. I was buying in the 20s, more like the not mid-20s, like 23, 24, I guess that is mid-20s. That's where I was starting to buy, and I averaged all the way down to about 15 when it got to about 15.50 roughly back in April. I was buying that dip, $17, $16 as well. Pretty much I was buying all from $23, $24 down to the 15s, and my average now is, I think, like 19 or something like that, roughly. And they just reported earnings today. Revenue came in at $50.7 million, with EPS coming in at negative 65 cents. And maybe we saw guidance that I'm missing here. Let's see here. They lost 65 cents. Okay, this is good. They see full year 2021 revenue of $235 to about $242 million. And when you value this company, I wish I knew, actually I could pull it up here on my Yahoo Finance. Let's say they make $250 million this year, right? And remember yesterday we were talking about Blink charging, how their price to sales was just disgustingly high. I mean, 200 price to sales. That's just ridiculous. Something like a Tattooed Chef, look, they make about again, $250 million a year, let's say, for this year. Their market cap is $1.7 billion, a little bit less than that. Oh, and that's actually at a $20 stock price. So now that it's down at $18, their market cap, let's just say it's $1.5 billion, maybe a little bit less than that. $1.5 billion is what you're paying for the whole business, and they make $250 million a year, roughly. That's what they're looking to make this year. To me, that's not too bad. That's a price to sales of what, a 6? And they're growing. They're not a tech company by any stretch of the imagination, but they're growing nicely year over year, and you're paying a 6 price to sales. When you're looking at valuation, at least from that metric, that is not bad whatsoever. That is why I think under $20 per share, Tattooed Chef's a good buy. That's just from my personal opinion, of course. You guys must always do your own research, but it's a night and day difference when you're comparing this to like a Blink charging. I mean, 200 price to sales versus a 6 to 7 price to sales. it's night and day. And I'm not throwing Blink under the bus. I'm just using them as an example from what we talked about in yesterday's video. Who knows? Blink could definitely be, it very well could be, a great investment over the next 10 years. But if I were to bank or bet my money on something, I'm going to be betting it on Tattooed Chef. Hence why I have money in Tattooed Chef and not in Blink Charging. But anyway, you guys get the point. That's kind of how one way I value companies is their price to sales. Price to earnings is great as well, but they're not making earnings, so they don't even have a P ratio for Tattooed Chef, that is. And by the looks of it now, we're trading under both moving averages, right? You guys can see we are fighting to hold 18, which very well could hold. And if it breaks under 18, guess what? I'm going to be buying more Tattooed Chef, especially if it starts going down to 16, 15, which I don't think it will, but it very well could. I mean, anything's possible. This is the stock market after all, right, guys? So anything is possible, but I don't think it's going to happen. But anyway, 18 is where it's holding. That's a higher low compared to where we held back in the middle of May. Also, from the end of April. So don't be surprised if buyers step in here. In fact, they already are. You guys see that green candle here after hours. So don't be surprised if this gets bid up to 20 again, maybe low 20s, whether it's tomorrow, probably not tomorrow, but maybe next week, the week after. I could definitely see that happening. And Disney, wow, what did I say, guys? In the video from earlier today, we said if Disney breaks out of this downtrend that it's been in, well, it's kind of a descending triangle, but I said, look, if Disney breaks out of this resistance, it's going to fly. And what do you know? It's up $10 after hours. I'm a happy shareholder, guys. That makes me happy. We're up 6% after market hours right now, and they crushed earnings. I mean, EPS came in at 80 cents versus 56 cents estimated, so that's great. Revenue came in at $17.02 billion versus $16.8 billion estimated. And let's take a look here at the live news tab to see how Disney Plus did and so forth. There's a lot of different segments of this business. So let's see here. Disney reports Q3 Disney Plus paid subscribers of 116 million, up from 57.5 million year over year. So they doubled up their subscribers, paid subscribers, which is awesome. And I'm sure you guys know this, but if you didn't, they don't own only Disney Plus. This is why I feel like Disney, I don't want to say it's like an ETF, but it's a diversified business in and of itself. It has parks, cruises, it has ESPN, these different channels, the streaming services. It's very diversified. So Hulu subscribers came in at 42.8 million. That's up 21% year over year. I like that. And Disney Plus average monthly sales per sub is down roughly 10% year over year to $4 a sub. I wonder why that's down. That's interesting. Average monthly revenue per paid sub decreased from $462 to $416. Oh, let's see. Here it says, due to a high mix of Disney Plus Hotstar subscribers in current quarter compared to prior year. What is Hotstar subscribers? I should know that. I'm not sure what that is. That's my mistake, guys. Maybe you can leave me a comment down below. Maybe that's a feature that Disney Plus has that's cheaper, bringing that average cost down. That could very well be it. And let's see here. Anything about the parks? Growth at parks and experiences business was due to the reopening of parks and resorts. I mean, we mentioned that before. Obviously, with more capacity, more people going there, hey, there's going to be an increase in growth there. I mean, it doesn't take a rocket scientist to be able to, identify that one. And let's see here. Okay, I mean, it comes down to that, right? It comes down to the Disney Plus growth. It comes down to the opening of the parks. That's great. I mean, Disney's going to do well. But there's a big risk, right? I mean, I don't know if it's a big risk, but with Delta, and Florida is one of the states that the cases are surging. Are they going to limit capacity? Are they going to shut? I don't think they're going to shut down, but I think they might limit capacity. I mean, that is not too crazy to think, right? And if they do, that might hurt the stock. I'm going to be honest with you guys. It might hurt the stock in the short term, but overall, as of now, we're breaking out. And at the same time, I'm thinking about this now real time, guys. If we get, it's crazy. If we get a big surge in lockdowns or whatever, sure, Disney's going to suffer when it comes to the parks, but hey, more people will be home, and guess what? They're going to sign up for ESPN Plus, Hulu. They're going to sign up for Disney Plus. So it hurts the parks business, but then it helps their streaming services. So it's kind of like a double-edged sword, or is that the wrong saying? You guys know what I mean. I think that's going to be good for Disney regardless. We'll see. And we had SoFi report, which if you guys caught my video earlier, if you guys are in my Patreon, which again is linked down below if you want all my real-time moves, SoFi is one that I've been in and out of, I believe, 3 separate occasions in the past 2-3 weeks. Made some great money on SoFi, trading in and out of it, and I sold out of it today at $17.45 after buying it yesterday at $16.96. So I made about 2.8% on an overnight swing. And you guys, this is what you have to understand with earnings. Things don't always go as planned, and this is why I don't trade earnings. Look at this chart. If I were to hold my SoFi position at $16.96, I'd be in the hole right now about 8% because the stock closed at $17.46 and now it's at $15.50. The stock went down over 10% after market hours. This is the danger of holding through earnings. Sure, you can make money. You might make a lot of money for all I know. You probably will sometimes, but one thing I could tell you is you're going to guess wrong and you're going to lose money a lot of the time as well. So it's literally a 50-50 gamble, and that is why I sell before earnings, at least for my short-term swings. Longer-term swings, a bit different. Same with, obviously, long-term investments. I'm not in and out of long-term investments before earnings. But for SoFi, the stock tanked, guys. It completely tanked. I mean, they expect adjusted net revenue to be between $245-255 million for Q3. They lost about 48 cents in Q2. They lost $165 million. That was the total loss. And their revenue is at about $230 million. And they reaffirmed full-year adjusted net sales of $980 million versus the $981 million estimate. And I'm not exactly sure why the stock is tanking. I kind of think it's an overreaction. We see here Q2 EPS was 48 cents in the red. That was down from the 3-cent loss year over year, so maybe that has something to do with it, the widened loss from last year. And EBITDA was $11.24 million versus the loss of $23.75 million. What else do we see here? It looks like the adjusted sales beat. So they beat with sales, and the stock is getting crushed. So I believe, and I could be wrong here, this is an overreaction. That is why I stepped in, like I mentioned 30 minutes ago, or 10 minutes ago when we started this video. That's why I said I came after hours and I bought more shares. And I bought more shares of SoFi. This is the stock that I bought more of. For the 4th time, here we are again for another rodeo. I'm buying more SoFi. And that's the beauty of swing trading. You can dump off your shares at a high price and then buy back in at a much lower price, which is exactly what I did. I bought these prior to me starting filming this video at $15.56 to be exact. That's where I bought back in, and I'm willing to average down. You guys can see on the 4-hour chart, SoFi has bounced around 15, 1550, 1450 many times in the past couple of months. So I think this time will be no different. I feel like we'll consolidate a bit, we'll be choppy, but I see an upwards move coming in SoFi. And who knows, a lot of the time, maybe not a lot of the time, sometimes what you notice with stocks, guys, is they might report bad earnings, the stock gaps down, and then all of a sudden, pre-market the next day, it's filled that entire gap back up, or a lot of it for that matter, or maybe even more, then it's all of a sudden green. That could happen, especially I noticed that more with stocks that are smaller in market cap, which SoFi is. It's not the biggest stock out there. So don't be surprised if we wake up and SoFi is at 1650. That's definitely possible. And at that point, I might even offload some shares, take that quick little overnight profit. We'll see. Airbnb also reported today. Airbnb's down a bit after hours. The stock is, it didn't do that great. EPS came in at, actually, no, it was pretty decent. They lost 11 cents EPS versus the 48 cents in the red estimate. That beat. Sales came in at $1.33 billion versus $1.23 billion estimate, so that beat as well. And now we're noticing a pretty big dump off. I mean, it's down $7-8 after hours. That is roughly a 5% drop, and it initially ran up. It hit 155. Filled that gap after hours, then boom, it lost about $12 after that. And at this point, guys, I'm not looking to touch Airbnb. I mentioned this in the video earlier, unless it breaks out of 155. From there, I can see it go 165 and so forth. But until then, I'm going to play it safe. DoorDash is another one that I'm looking at here, which I like the technicals on this a lot, to be honest. It's been reversing the past couple of months. We were in January through April, we were downtrending under the moving averages, all that stuff. But now, again, we're reversing above the moving averages. Well, now we're under the 50, but we're above the 180. We're holding a higher low after this earnings report. And they just did, let's see here, EPS. What did they do for EPS, guys? Let me look. They lost 30 cents per share, and they did about $1.24 billion in revenue. Not too shabby. And the stock is down about $10. So let's see if buyers step in here. I mean, this could be a spot where it's oversold, right by the moving average, high or low as well. This could be a spot where buyers do end up stepping in. So I'm watching DoorDash. GEVO is another one. They just reported. Let's see what they ended up doing here. 9 cents in the red versus the 5 cents in the red estimate. So they missed EPS. And sales, oh geez, sales got annihilated. 400K. 400K? What the heck? 400K in revenue. There's people that make more money than that. Oh my goodness. 400K versus the 580K. Is this one of those high price to sales stocks, guys? Let me pull up my Yahoo Finance. Give me a second. GEVO, market cap, $1 billion. All right. That's still a very high price to sales. If they're only making 400K a quarter, probably anywhere from $2 million-ish a year. So, yeah, GEVO, it's a risky stock, guys. I'm not going to lie to you all. And I wouldn't touch this unless it broke out of the moving averages, which it's trying to. It has been the past couple weeks, but it hasn't gotten there yet. And Apple's one that I feel like AAPL is on the verge of breaking out. You guys can see we ran up today over 2%. Testing the top of this channel, or the top of the wedge, whatever you want to call it. And we're trying to break out of here. I feel like if 150 breaks, which is the all-time high, Apple is going to be going, maybe not to the moon. I don't want to be one of those crazy guys here that thinks everything's going to the moon. But I could see Apple go 155, maybe 160. That is definitely possible. So we'll wrap it up here, guys. I hope you all enjoyed the video. If you did, you know what to do. Smash the like button, subscribe. Make sure to go down below. Let me know your thoughts in the comments. Check out my Patreon as well. If you guys want all my real-time buys, sells, call-outs, a morning update video, more access to me throughout the day, and exclusive content, all of that's on Patreon, link down below. Or you guys can go to StockSurfFest.com/Patreon. Make sure to also get your M1 Finance money, free money, $50 from M1 Finance. Use my link, deposit $100, and you get your $50. In fact, my dog Ibiza, she's going to tell you what to do as well. Hold up. And she wants to see you guys. Give me a second here. Come here, Ibiza. Come say hi. I haven't shown her in a little bit, guys. Take a look. She just got her hair cut. Come here, Ibiza. She's like, what the heck are you doing, Dad? Look at her. You look so good. Oh, let me cover this. Hey, you look so good. What do you want to tell them? Check out the Patreon, right? Get your $50 get your $50 for my M1 Finance, right? Oh, okay. Okay. Yeah. That's it, guys. She's like, take me out on a walk, give me a freaking treat, leave me alone, man. I hate you. You're annoying. No, she doesn't hate me. But yeah, you guys, yeah, that's it, you guys. So yeah, I'll catch you all in the next video, which I made one earlier. Check it out. I'll pop it up here. I'll see you there. Keep crushing the market. Stay safe out there. As always, peace out.